Good morning to all of you. Welcome to our class. We are not going to eat all the others. We just proceed. Okay. Now I've created some a poll there. Okay, to help us more or less determine which area or rather where do we concentrate, where do we pay more attention, where do we pay do we concentrate our efforts. So I would want you, more or less to pick some of the top three topics, top three topics in quotes, of the topics that you think that we can give more concentration, we can give more concentration, so pick your top three topics that you think, during this revision time, that you think I need to pay more, I need to concentrate more, and you think that other students ought to give more concentration, so pick your top three, don't pick more than that, top three, pick top three only, so I want to determine to know exactly which topic should I pay more attention, during this revision time, so pick your top three, so take the next 1 minute to pick your top three topics, where you think I should pay more attention when or during this revision time, so take 1 minute. Okay. And as you can see, those are the top three topics, that I'll give more concentration, seems that we have more towards audit planning and risk assessment, we have audit review and finalization, and you have the auditor's report or the audit reports, then fair enough, as we go on towards the revision, I'll give more concentration towards those three topics, audit planning and risk assessment, audit review and finalization, and you have the audit reports, so more or less, that's where I'll give more concentration on, as you just said, so let me just save these results, because I'll be using them, as we carry on the revision. Now I suppose that, I normally prefer, because this is revision time, so there's nothing new I'll be teaching you, there's nothing new that I will be teaching you, it's just what we have been going through, so therefore don't forget, this is your revision, this is your revision, and of course it's meant to assist you, to prepare well for the revision, to prepare well for the exam, so therefore don't forget, if you have any question, don't forget, this is the time I will attempt to answer it, This is the time that we, yourself as well as your fellow classmates, we will attempt, to answer it, so don't forget, have them, don't stick with the question, hear it out, and you're going to pay more attention towards this, so don't forget, we are here to revise, we are here to prepare for the main exam, don't forget, Now, I normally prefer, this is just my opinion, I normally prefer that we go through the entire syllabus, of course, in a very summarized way, you're going to go through the entire syllabus, but of course, as you just said, we'll give it more concentration, giving more concentration towards these three topics, the one you just mentioned, towards giving more concentration towards these three topics, But you go from topic one all the way to the last topic, if we would have finished within those three, how many classes we have, we'll try to see how we can work around it, but we'll ensure that we do go through the entire syllabus, if that means that we have maybe 1 or 2 makeup classes, it's okay, we are here to learn, don't forget. Now, that is what I normally prefer, but we go for topic 1, topic 2, topic 3, until the last topic, if we are discussing topic 1, like right now, for example, then all the questions you may be having regarding topic 1, now we attempt to answer it during that time, Next time we go topic 2, any question you may be having regarding topic 2, we attempt to answer it during that time, That's normally what I normally prefer, But of course, as I mentioned, this is your revision, This is your revision. So in case you do have any question, if you do have any suggestion on how we can make better the time for revision, then don't forget, you're free to let me know, or how you think we can better do the revision, Don't forget, you're free to do that, us any question, so any suggestion, because this is your time for revision. Okay, this is time for your revision. There's nothing new I'm teaching you. Okay, it's just to assist you to prepare well for your main exam. Prepare well for your main exam. Okay. Now, okay, I don't know. In case you have any suggestion, don't forget you can do it on that chat. Okay, on how you think we can be able to better approach this revision time. Okay. Okay. I guess we can begin. Okay. But in case you have any suggestion on how you think we can better approach this revision, I have all ears. Okay. And actually, I'll not be muting you. So this is your time for revision. Okay, maybe just in case of a question, you will ask me. Okay, you can raise your hand up, and of course, you just unmute yourself. Okay, so I will not be muting you. Okay, this is time for revision. So you have a question, just you need to ask me. Okay, you can raise your hand up and you can unmute yourself. Okay, you ask the question. Okay, in case you do have any suggestion. Okay. Now, before even we start, let me just hear one or two suggestions, okay, on how you think of that approach. Emma. Emma.
Yes.
Yes, what was your suggestion? Do you think that's a good way of trying to approach the revision?
Yeah, I think it's okay.
No, okay. In case you have a suggestion, don't forget, you let me know, okay?
Okay.
Yeah. Karen. Karen. Karen, where did you, Karen? Hey, you ran away, Karen. Hey, Ashley.
Yes.
Yes, what do you think of that suggestion?
Okay, it is okay.
Mm-hmm.
Yeah, I'm okay.
You okay with that one?
Yeah.
Okay. Don't forget, in case you have suggestion, okay, don't shy away, okay? Do let me know in case you think that we can approach it in a better way, okay? Petronila.
Yeah.
What do you think of that? Or do you have a better suggestion?
No, I think it's okay.
Okay, you think that approach is good?
Yes.
Okay. Quinta.
Yes.
What do you think?
I think it's fair enough.
Okay. And by the way, in case you have question that maybe beyond, for example, the mock, beyond the question bank, okay, then you can share it. You can share it with us, okay, maybe in advance, okay. So in case you get a question from another paper which may not be accessible, okay, to every person, don't forget you are free to share it with us, okay. You can share it in the WhatsApp group, okay, in whatever platform you want to share that question, okay. But you can give us access. You give us access to that question so that we can all attempt it together, okay. Kami.
Yes.
Yes. What's a suggestion? Do you think that's a better approach, or is there another better approach you can use?
No, I'm okay with that.
You're okay with that? Okay. Okay, fair enough. I guess maybe you can take that approach then, okay? Now, topic one, okay? Then as I mentioned, we're going to go topic by topic, okay? Of course, in a very summarized way. Just give me 1 second. Okay. Now in topic one, we did introduce on audit and assurance. Okay, it was more towards an introduction towards audit and assurance. So it was introduction towards audit and assurance. Okay, in this topic, we more or less were defining, okay, what do we mean by audit? Okay, what does the term audit imply? What does the term assurance imply? Okay, we said that audit essentially, this is going to be conventional, okay, it is an independent examination, okay, the independent examination of the company financial statement, not just company, it can be there for the individual, okay, an independent examination of the financial statement of individuals, of company, of partnership, okay, with the sole purpose of getting to understand, okay, getting to get an opinion, okay, get an opinion, okay, as to whether those set of accounts, those set of financial statements, okay, they do present a true and a fair view, okay. So the key term there is that it's independent examination, okay, is an independent, someone independent of that particular business, that particular firm, that particular partnership, okay, that particular company, okay, is going to go through the company set of financial statement, okay, to give an opinion, okay. At the end of it, he is meant to give an opinion, okay. He is going to give his own individual opinion, okay, as to whether the accounts of the company do present a true and fair view. They need to get a report, okay. At the end of that examination, okay, the users of those financial statements do need to get a report, okay, as to whether those financial statements, okay, as to whether those financial statements do present a true and a fair view, okay. Therefore, at the end of the engagement, okay, therefore, don't forget, you as the auditor, okay, you as the independent examiner, okay, in court, okay, of this set of accounts, okay, the subject matter, you do need to give an opinion as to whether those financial statements, okay, those set of accounts you have gone through, they do present a true and a fair view. Independent examination was the aim, to be able to extract or to be able to give an opinion, to give an objective opinion, okay, as to whether those accounts do present a true and a fair view. And what's assurance, okay? No assurance, don't forget, at the end of the day, okay, the audit, okay, in most cases, okay, you're going to be appointed by the person who is going to be preparing the subject matter, the person who is going to be preparing, for example, the financial statement, okay, is not the one who wants the opinion, or rather, the person who needs the opinion, the person who wants to know whether the financial statement of the company do present a true and a fair view, okay, is not the one who did prepare, okay. So they need someone else, independent of the preparer, independent of the person who was involved in preparing the subject matter, okay, to give an opinion, okay. So the person in this conventional, in this case, the shareholder, okay, they need someone else who is going to go through the set of financial statements that were prepared, okay, in this case by the management, okay, to give them assurance, okay. Now this set of account prepared by the management, okay, we need to assess, okay, we need to be confident in quote, okay, we need to be confident when using them, okay. Do they present, for example, okay, the true position of the company, asset and liability, okay? Do they present the actual position of the company, financial performance, okay? Do they present these accounts of the company actual position in terms of its cash flow, okay? Do they present are the disclosures given, or are the notes those financial statements, do they present true and fair view, okay? So the essence here is that the person who is going to be appointed, for example, okay, they do require, they need, what they need is more of confidence, okay? We want to be confident, okay, when using this set of financial statement, okay? That's the key idea, okay? It's about increasing the degree of confidence, okay? That's the term assurance, okay? We are increasing the degree of confidence on the users of those financial statements, okay? We see that essentially, okay, that's audits, okay. We see that actually when it comes to the engagements that can be, the engagement that you as, let's say as an auditor, okay, you can be engaged, okay. We can classify them in two main categories, okay. We can classify them mostly in two main categories, okay. We have called the assurance engagement, okay. So we can classify them into you call the assurance engagement, and we have what referred to as the review engagement, okay? Assurance engagement, and we have the review engagement. That's the main classification of the engagement that you as an auditor, you can be engaged in. Assurance engagement, and you have the, okay? What's the key difference between the two, okay? What's the key difference between these two? Assurance engagement and the review engagement, okay? Now, the review engagement, okay? Let's begin by defining the assurance engagement, okay? We say that an engagement is going to be classified as an assurance engagement. An engagement is going to be termed as an assurance engagement, okay? Once it achieves what we call the criteria, okay, for it to be defined, for it to be referred to as the assurance engagement, okay? And we mentioned 5 criteria. Okay? Just a quick recap, okay? Those 5 criteria discussed, okay? We say that an engagement is going to be deemed to be an assurance engagement if it is going to have those 5 criteria, okay? And I think we gave a mnemonic for it, okay? Hope you remember, okay? Now, just to check. Karen, what is the mnemonic? Karen?
Yes.
What is the mnemonic we use to assess? What are the features? What are the elements of assurance engagement? We use a mnemonic.
Chris.
the crest here. We use the term crest, okay? We use the term crest, okay? We use the term crest, okay? Where C is the criteria, okay? But at the end of the day, okay, when it comes to the assessment as whether the subject matter, okay? So S here is the subject matter, okay? You did this is called the subject matter, okay? When it comes to assessment as to whether the subject matter, okay, was, for example, prepared in accordance with the requirements, okay? We require, for example, a framework. We do require a framework, a guidance, okay? That when it comes to, for example, saying that the accounts of the company have been prepared well. Now, what are you referring to? Okay, you are referring, for example, to the IFRS. Okay, so there need to be a criteria. You are assessing based on what? Okay, we are coming up with the opinion based on what? What's the framework you're following? Okay, that's called the criteria. Okay. And of course, it's about the report. Okay, then at the end of the engagement, you need to prepare a report. Okay, and I think you did see the case of the audit. That at the end of the engagement, you do need to prepare what we call the auditor's reports. Okay, you do need to prepare what referred to as the auditor's reports. Okay, you need to address to the users. Okay, the person who would appoint you. Okay, the person who did appoint you. Okay, you do need to prepare a report, address them. Okay, telling them, hey, your accounts are okay, your accounts are not okay. Okay, you do require to prepare a report addressed to the person who was, for example, involved in preparing those reports. Okay. Then of course you look at the evidence, okay? You can't just give the report, okay? Without the evidence. Why do you say the accounts of this company do not present a true affair? You do require the evidence. You do need to gather evidence. You do need to gather supporting documentation, okay? That will more or less be assisting, okay, in proving, in supporting, okay, the final reports you will be preparing, okay? So you do require to gather the evidence, okay? And of course, you call the tri-party, okay? Tri-party relationship, okay, or three-party relationship, okay, the three-party relationship, okay, that you require to have at least 3 persons involved, okay, 3 persons must be involved along the way, okay. We have, for example, in the case of an audit, okay, I think we gave 3 persons, okay. There was a person who gave a point of view, okay, there's a person who is going to be preparing, okay, and of course the person who would be involved, okay, in the actual in the opinion, in coming up with the opinion on those set of financial statements, okay. We went research at the end of the day, okay? Audits do qualify, okay? Audits of the financial statement qualifies as an assurance engagement, okay? Audits do qualify an assurance engagement because all those 5 criteria, Yes, Quita, you can unmute yourself. You have a question.
So if you are asked the 3 responsible people.
Sorry, if you asked?
To name the 3 responsible people.
I don't get, if you asked what?
The last criteria is 3 responsible people. So who are they? Kindly.
Oh, who are the responsible persons here? Okay. Now the 3 persons involved. Okay. If, for example, you take the case of assurance engagement, there are 3 persons who are going to be involved in the 3-party, tri-party. Okay. We have the responsible party. We have the practitioner. Okay. So we have a responsible party. We have the practitioner, and lastly we have. Who is the last person?
Kindly say those 2 again.
So in the case of the 3-party relationship, we have 3 persons involved. We have the practitioner, we have the responsible party, and lastly we have
users.
And you have, of course, going to be the users. Okay, of course, we're going to have the users. Okay, they're going to be 3 persons who are going to be involved. Okay, we're going to have the responsible party, you're going to have the practitioner, and of course, we're going to have the users. Okay, those are the 3 persons who are going to be involved. So your question was, who is the responsible party? If I got you correctly.
My question was, so we should state them like this and not as shareholders, auditor.
No. In case the question will be asked, for example, why do you think audit qualifies to be an assurance engagement? Now, in case that is the question, then you can answer it from that angle. Okay, the 3 persons. Okay, in the case of the practitioner, you're going to be having the auditor being the practitioner in this case. Okay, in the case of the audit, the users are the shareholders, the members of the company. Okay, and lastly, the responsible party will be the management. No, you're only going to be stating the shareholder, the management, the auditor, in case you're being asked to prove in court, okay, why an audit qualifies to be an assurance engagement. But in case you're being asked what are the features of an assurance engagement, then you don't need to mention the shareholders, the management, as well as the case of the shareholder. You don't need to mention them. In case we are discussing on assurance engagement, not as audit engagement. It's clear, I don't know.
Yeah.
Okay, yes. So generally, in case you're going to only mention shareholders, the management, the auditor, in case now you're discussing about why an audit is an assurance engagement. Okay. Now, so that's on the assurance engagement, and we see that the audits do qualify to be an assurance engagement because it does all those 5 elements. Okay, all those 5 elements they exist. Okay, in the case of an audit engagement. Okay, just like what you just mentioned. 3 party, in case of an audit, 3 parties will be the shareholders. Okay, here we say the users. You're going to have responsible party. Okay, I'm going to have the practitioner. In the case of an audit, the users, okay, we mentioned shareholders. The users will be shareholders, okay, members of the company. The one party is going to be the management, the one who is involved in preparing the subject matter. And of course, professionals in this case again be the auditor, okay? It will be the auditor, the one who is going to come up with an opinion, okay? In the case of criteria, we say that we're going to use IFRS in the case of an audit, okay? As well as the use of the international standard on auditing, okay? The report is the auditor's report, The evidence, okay, of course, the audit evidence, you do require to gather audit evidence in order to prove or in order to ascertain, okay, on the final audit report you'll be preparing. The subject matter, in the case of an audit, okay, of course, will be the financial statement prepared by the management, the financial statement, okay. So we'll get this more or less why we do so that an audit qualifies to be answered again, because all those 5 elements, okay, they do exist in the case of an audit engagement, okay. Now, in case an engagement, okay, cease to have either of those 5 elements, okay, it can have 4, it can have 3, okay, it can have 1 out of the 5, okay, then that engagement does not qualify to be an assurance engagement, okay, that engagement does not qualify to be an assurance engagement, okay, then what we refer to it as the review engagement, okay, okay. For example, in case you're going to be asked to carry out, if we ask to carry out a due diligence, okay, a due diligence. To give an example, in case this is a due diligence you're carrying out, okay. Now, in the case of a due diligence, okay, you don't need the person, for example, okay. In case company A want to acquire company B, okay, they want to assess whether maybe what is the financial status of company B, okay. Now, company is doing a due diligence, they appoint you to carry out a due diligence on company B, okay? So in this case, for example, there are only 2 parties involved, okay? You as the practitioner who is going to be coming up with an opinion on, for example, the financial status of company B, and the person who appointed you, in this case, company A. So there are only 2 parties, involved in this case, okay? Therefore, therefore, it cannot be an assurance. There's not an assurance engagement that you're being involved in here, okay? There are only, for example, 2 parties involved in this engagement, okay? In case, for example, you're trying to carry out a compliance audit, okay? In case, for example, you're trying to carry out a compliance audit, okay? You want to assess as whether this company, is it in compliance with the laws and regulations, okay, that governs its operation, that governs how they do carry out their business, okay? Now, this is a compliance audit, okay? Who needs this particular compliance audit, okay? Is, for example, the shareholder of the company, okay? They're the one who want to assess whether the company is in compliance with the laws and regulations, okay? So there's nothing at the end of the day, okay? When it comes to when it comes to the 3 party, okay, the only 2 parties who need the report, okay. We are the shareholder. We are the one who want, for example, okay, to assess whether our company is in compliance with the laws and regulations that governs the operation of this particular company, okay. So all these, they therefore fall under the case of the review engagement, okay. If, for example, okay, you're going to have an interim financial statement audit, okay. It does not qualify to be an assurance engagement, okay. It doesn't qualify to be an assurance engagement. Why? Because the procedure, okay, you're going to carry out as an auditor, okay. The procedure you're going to carry out as an auditor, they don't constitute what we call as the assurance engagement, okay. They don't consider referred to as the assurance engagement, okay. You may have all those elements, okay, the criteria, the report, the evidence, subject matter, okay. But at the end of the day, okay, the shareholder at the end of the day, the interim report audit, okay, does not qualify, okay, as per se to be an assurance engagement, because the procedure you're going to carry out, okay, is going to be less than what the procedure you can carry out that constitutes a full year financial statement audit, for example, okay. Now, therefore, all the other engagement you're going to be engaging, okay, that doesn't constitute, okay, that do not have those 5 elements, okay, then we refer to them as, or refer to as the review engagement, okay, as the review engagement, okay. Now, when it comes to the point of appointment, okay, you have to get to understand, okay, what sort of engagement is my client want to engage in, okay, what sort of engagement is this client, okay, want to engage my I as the auditor, okay, I as a practitioner in. Is assurance engagement? Is it a review engagement? Okay. But also say that don't forget that you have to consider, okay, there's something you ought to consider, okay, before you accept either the engagement, okay, before you accept either of the engagement, okay. And at the end of the day, okay, the level assurance, okay, the level assurance that you're going to be given, okay, if you're going to be engaged in a case, if you're going to be engaged, okay, in a case of an assurance engagement, okay, if you're going to be engaged in the case of the assurance engagement, okay, then of course the level assurance, the confidence level that you ought to give to the users of these set accounts, okay, is a bit higher, okay, compared to the case of the review engagements, okay, compare the case of the review engagement, okay? In the case of assurance engagement, the users need the assurance, okay, as to whether those financial statements are free from material misleading. They do present a true and a fair view. So the level of assurance here is a bit high, okay? What we refer to as positive assurance engagement, okay? So in this context, okay, then we have called the positive assurance, okay? Because assurance also referred to as the reasonable assurance, okay? Positive or reasonable assurance. Okay. If you're going to be engaged, okay? If you're going to be engaged in the case of review engagement, okay? The assurance level that the users do expect, okay? The assurance that the users do expect, okay, is a bit lower, okay? Is a bit lower. Their users the main idea that we want just to know, okay? Is the company, is it in compliance with laws and regulations, okay? There's no sort of high assurance that we need that the accounts of the company are free from material misstatement, okay? So even when it comes to the framing of the final report, okay, of course, in case it was an assurance engagement, then the framing need to be in positive, okay? It need to be in positive, okay? In case it was a review engagement, okay, then it's going to be the framing of the in quote the opinion paragraph. The framing of the opinion paragraph is going to be negative. Okay, referred to as the negative assurance and engagement. Okay, it will be negative. Okay, the levels that we do accept is a bit lower. Okay, the assurance level we do accept is going to be lower. Okay, in this case, therefore, it cannot be referred to as the limited assurance engagement. Okay, it's referred to as the limited assurance engagement. The level of assurance needed is also going to be limited. Okay. And that's the key distinction between those two, okay? We have the case of the assurance engagement and the case of the review engagement, okay? So the procedure that you're going to carry out, in the case of review engagement, okay, they don't constitute, okay? In the case, I give the example, okay? If the case of assurance engagement, you meant to carry out 10 procedure, okay? If in the case of assurance engagement, you meant to carry out 10 procedure, but you carry out 8 procedure, then that's not assurance engagement. It is a review engagement. Okay, an example, in the case of interim financial statement audit, okay, don't forget you don't carry out all the procedure. Okay, for example, you don't need to carry out, for example, okay, the case of the bank confirmation. You don't need that in the case of an interim financial statement audit. You do not need to do those confirmation. Would imply, therefore, if you compare the case of the full year financial statement audit, there's some procedure you're going to carry out more than what you're going to carry out in the case of an interim financial statement audit. And by default, since the procedure are less, but it means therefore the interim financial statement audit is a review engagement. Okay, and since you're not going to confirm every single matter, okay, that implies therefore the assurance you're going to give them is also going to be limited. Why you did not carry out all the subsequent procedure on those set of accounts you're going to give an opinion on. Okay. And I guess that was on topic 1. Okay, unless there's a question you'd have. Just going to ask.
You said assurance engagement and review engagement are branches of what?
engagements that you as an auditor you can be asked to perform. Okay, there's some, okay, in quotes, there's some of the work, okay, you can be asked to perform as an auditor. Okay, engagements that can be asked to perform as an auditor. You can be asked to do a review engagement. You can also be asked to carry out a assurance engagement. Okay.
Okay.
Yeah. Emma.
Could you please touch on the expectation gap, or we're not?
Okay. Yeah. Okay. Now, Emma is saying what we touch on the expectation gap. Okay. Now, let's discuss it in summary. Okay. Expectation gap. Conventionally, when you do carry out audit, okay, you do carry out audit. This what we call the view. Okay, what does the public? Okay, what does the market? Okay, what does the other people other than the three of you? Okay, shareholders. Even in the case of shareholder, even the manager themselves. Okay, what you do as an auditor, okay, there could be perception that maybe what you carry out might be different, okay, what you actually do, the perception, okay, of the market, the perception of maybe the public, okay, might be different from what you actually normally carry out, okay. If, for example, we give the case example, conventionally, okay, if you have shareholders, okay, maybe some of them, of course, they will not be auditors. They will not be. They might not have done accounting. Okay, they might think that by the mere fact that you have given unqualified, unmodified opinion, okay, you have stated that the accounts of the company do present a true and a fair view. Okay, by the mere fact you have done that, you as the auditor, the accounts of your company present a true and a fair view. What do they perceive? They perceive that everything on those financial statement in quote is correct. In reality, okay, we know that as an auditor, don't forget, it doesn't mean that way, okay? Don't forget, you did use, for example, the concept of materiality, okay? There could be some accounts in a particular financial statement which you never did audit. Why? Because they could have been immaterial to you, okay? It does not mean that since they are immaterial, they are free from misstatement. There could be misstatements that do exist on those financial statements. But the users might get this, okay, they might be of this opinion that since the accounts of the company, since the opinion you have given us means the accounts are true, they do present a true and a fair view, then the accounts of the company are 100% free from misstatement. That is a wrong perception, okay? Now let's call the expectation gap. What you actually do, what the market perceives that you normally do is different from what you actually normally do as an auditor, okay? The opinion they're going to give, okay, they might extract it as if it is in quotes the gospel truth, okay, but in essentially that's not the case, okay. In the case of an audit, okay, in the case of the audit, okay, so the misperception, okay, the misperception of what you normally carry out as an auditor, or what you carry out as an auditor, okay. Even some case, you may have a case where the users think that you are the one who did prepare the accounts of the company. Don't forget, we know that you are not the one who prepares the financial statement. The management are the one who prepares the financial statement. Okay. Now that's a misconception, okay, of what you normally carry out an auditor is what referred to as the expectation gap. Now we have what we call the reverse expectation gap. Okay. Okay, they call the reverse expectation gap. Now, when does this exist? Okay. Now, this is going to exist, for example, if, for example, okay, let me give the case of the KRA, okay. There's some auditors, okay, who in the past have been, in quote, crooks, okay. Now, if, for example, your accounts are audited by a certain set of auditors, okay, then the KRA would want to know exactly, are these accounts, are they okay, or could there be some fraud here, okay? Because in the past, for example, these auditors have been involved in assisting the client in cooking the books. Okay, these auditors have been used by clients in cooking their books. Now, in case maybe carriers do see the accounts of company A have been audited by this auditor, by this set of auditors, then they are going to be very concerned. Okay, here there could be fraud that exists. Okay, that is going to be the perception of, for example, KRA. Okay, now that's going to be a reverse. So instead of having a good perception, instead of having a good perception of those financial statements, there's a negative perception. Okay, there's a negative perception of those financial statements. We are going to take those accounts with a pinch of salt. Okay, more or less, because you are the one who have audited those accounts, but we mean by a reverse expectation gap. Okay. Conventionally or generally, okay, if the accounts are audited, we are going to think good of them. Okay. But in case they're going to be audited by this particular auditor, then we are going to be, hey, here there could be something that might be occurring. Okay. But in by a reverse expectation gap. Okay. Okay, Emma.
Yes.
Okay. And actually, because you just mentioned, don't forget, we see that in the case of in the case of an audit, okay, it might not be possible for you as an auditor to give or call the absolute level of assurance, okay, just make a quick mention, okay, but it is not possible as an auditor to give an absolute level of assurance, okay, because of the key inherent limitations of the audit, okay, and one of them, for example, is that there could be cases, okay, that you don't audit every single transaction, okay. As an auditor, you do not audit every single transaction within the company. You only take a sample, okay, which means therefore you cannot give 100% assurity, okay, on the correctness of those accounts, on the correctness of those figures that the company has prepared, okay, or called the key inherent limitations of an audit, okay, things that prevent you, okay, from giving absolute level of assurance, okay. Any question from topic 1? Any other question?
Excuse.
Yes, Karen.
From the notes, okay, I'm just confirming my notes as we are revising. There is this part you gave us, types of assurance engagement. We named them annual, external, audit, review engagement, half year, that interim concern, and all that review. So from what you've explained about review engagement, you've talked about compliance, audit, interim, financial. Can you please elaborate more, or which are these types of assurance and which one have you given us?
Okay, let me refer. I don't have the notes well. So what did we classify them as? Just repeat.
Types of assurance engagement. You said review of compliance.
A review of compliance, yes.
Then review of effectiveness.
Review of effectiveness, yes.
Then going concern.
Going concern review.
Interim.
Interim financial audit, yes.
Then review engagement.
Then review engagements.
And lastly, annual external audit.
Wow, we classify them as assurance engagements.
Types of assurance engagement.
Well, types of assurance engagement. Well, because what you've just mentioned about there is more of type of review engagement as opposed to being type of assurance engagement. Well, so it was on the notes I gave you.
Yes.
Oh, okay. I'll need to recheck those notes again because what you've just mentioned there is more of type of review engagement as opposed to being type of assurance engagement. The case of the going concern review initially is a review engagement. Okay, the effectiveness of the internal control set is more of a review engagement. So it's not an assurance engagement as per se. Okay. Let me review those notes again. Let me review those notes again. Then I'll come back to you. If that's what we used it then. That was a question.
Yeah, I just want for you to clarify.
Okay. Let me check those notes again because what you have just mentioned, they're not as per se type of assurance engagement. They are more of type of review engagements. Okay, they are more of type of review engagement. Okay, as opposed to the case of the external audit. In the case of external audit of financial statement in itself, that is an assurance engagement. Okay, I'll come back to it. Okay, I'll need to check those notes again to check maybe in case there was a type. I'll check those notes again, not again. But thank you for
lastly,
yes, Karen.
Touching the same point.
Yes.
Under review engagement, you gave us two major categories, which is attestation engagement and direct reporting engagement. So Are these two types of review engagement, or they are still under
They're part of
assurance engagement?
No, actually, those review engagement that I mentioned there, in itself, those are review engagement. Like just in case of direct reporting engagement. Okay, an example is a compliance audit. Okay, the example of it is the compliance audit. Okay, I think we have just mentioned it here. Yes, one of the example of the direct reporting engagement in itself is an assurance is a compliance audit. Okay, so it is a review engagement. Okay, it is a review engagement. Okay. In the case of the attestation engagement, okay, in the case of the attestation engagement, you're simply, as the term suggested, you are attesting something, okay? You're going to be attesting something. If, for example, you're going to be engaged to carry out, to assist in the inventory count, okay? In case you're going to be asked to carry out, and you're going to be assisting, okay? You're going to be reviewing, okay? How the case of, let me see, the criteria, okay? Let me use that term. In the case of the attestation engagement, the criteria going to be using, okay, is going to be in quotes, okay, given to you. Now, in the case of the financial statement audit, the criteria is going to be out of the framework. In the case of the attestation engagement, what you'll be attesting to, okay, the criteria going to be using in quote will be given to you. Okay, if the person appointed you is going to be the management, the criteria you're going to be using is going to be like given to you in quote. Okay, that's what I mean by the attestation engagement. Okay, so that's why it is part and parcel of the review engagement. The criteria you're going to be using, okay, is going to be sort of given to you. Okay, we want you to do A, B, C, and D. Okay, it's like you're being told what to do. No, in the case of the financial statement audit, the management do not dictate what you're going to carry, what you're going to be doing. Okay, the management do not dictate what you're going to be doing. But in case you're going to be engaged, okay, and you're told that we want you to do A, B, C, and D. We want you to carry out a due diligence. Okay, we want you to carry out an inventory count. And our main objective, what we want from you as our practitioner is to attest, is to confirm whatever you want. We are going to give you what you're going to do. Okay, now that's when we qualify we call attestation engagement. Okay, and that is part and parcel of the review engagement. Okay, in the case of, just repeat, in the case of the attestation, what you are attesting to, the criteria, okay, is going to be like present to you. Okay, I will be the one who will be appointing you. I want you to do A, B, C, and D. Okay, so in case of the case, therefore, that this an attestation engagement, and it is part of the review engagement. Karen, I hope that's clear.
So in case you asked two types of review engagement, you give the attestation direct reporting engagement.
Yeah, you can give them. Okay, you can give them. Okay, or in case you forget those terms. Okay, look, you can just give terms here. Due diligence itself, review engagement, compliance audit is a type of direct reporting engagement. Okay, actually, let me just. So here, compliance audit, okay, is a type of the direct reporting engagement. So it's like one of the same. It's just an example. Okay, direct reporting engagement. Yes, you can give that those two examples if you prefer. Yes, you can give them. But in case you forget, don't forget there are other examples that you can give. Okay, it's not going to be that these are the only two types of engagement, the review engagement. Okay, there are more than that. Clear, Karen?
Yes.
Okay. Okay, so that's all on the first topic. Okay, any other question on that topic? Okay, I guess we can take a very short break. We can take a short break. We meet at, let's check from one of you. Kami.
Yes.
We take a break.
Yeah.
We meet at what time? Now it's 9:19.
15 minutes.
So we meet at 9:34.
15 minutes.
Okay, fair enough. Then we can meet at 9:34 then. Okay. Don't forget, now you prepare for the next topic. Okay, with any question you'll be having. I think the next topic could be on legal framework. I think it should be more towards the legal framework as well as on the professional framework. Okay, so prepare for questions. Have questions on that particular area. Okay, so that we discuss, we answer as many questions as possible from that area. Okay. Then fair enough, we meet at 9:35. Okay. Our topic 2, okay, was more towards the legal framework and professional and ethical framework that we are meant to follow as auditor when it comes to carrying out the audit. Okay, when it comes to carrying out the audit of the financial statement. When it comes to carrying out the audit of financial statements. Okay. Now, when it comes to the legal framework, okay, comes to the legal framework. Okay, you see that you're going to be following, or rather, there are 2 acts that you're meant to be in compliance with. Okay, one of course, is the Companies Act. Okay, the Companies Act 2015. Okay, and you have the Accountants Act. Okay, we have the Accountants Act. Okay, those are the 2 legal framework that you're meant to follow when it comes to carrying out the audit in Kenya. That is okay. Now, at the Companies Act, okay, of course, it makes a number of provisions, okay, regarding, for example, okay, so the provisions and the case of the Companies Act, okay. Let's begin with the appointment, okay, just a summary of it, okay. We begin the appointment, okay. When it comes to the appointment of the auditor, there are 3 persons, okay, who can appoint the auditor. Okay, there are 3 persons who can be involved in the appointment of the auditor. Okay, we have the first person, okay, is the company shareholder. Okay, let me say the CS. Okay, so the company secretary. Okay, we have the directors of the company. Okay, directors of the company, and you have the shareholders of the company. So those are 3 persons who can be involved, okay, in the appointment of the auditor. The CS, the director, and now the shareholder. Okay. We said essentially, if the shareholder don't appoint the auditor, okay, the directors don't appoint the auditor, then they do in quote pass on the power to the CS. So the CS of the company, the CS are responsible for company's operation in Kenya. Therefore, can be the one they pass on that power, okay. Therefore, to the cabinet secretary, to the CS, okay. If the company has just been formed, then the directors of the company have the power to appoint the first-time auditor for the company. Okay. If the company is a new company, it has just been formed, okay, then conventionally the first auditors of the company shall be appointed by the directors of that company. Okay. But generally, the power to appoint the auditor, okay, vests with the shareholder. Generally, okay, the power to appoint the auditor vests with the shareholder. It is the shareholder who are going to be the ultimate appointers, okay, of the auditors of the company, okay. And you see that when it comes to the actual appointment, in reality, okay, when it comes to the appointment of the auditors of the company, generally, okay, the shareholder can exercise that power at the AGM. Okay, the shareholder can be able to exercise that power at the AGM. But they normally pass on that power to the directors. So generally, the directors of the company are the ones who are going to be involved in the appointment of the company auditors. Okay, but it is not that power, okay, has just been passed on to them by the shareholder. Okay, the shareholder are the ultimate people who should be appointing the auditor. But in reality, okay, conventionally, the person who do appoint the auditor shall be the directors of the company. Okay, of course. The acting as custodian, acting as stewards, okay, of the shareholders, okay. That's on the appointment, okay. Those are the people who are the 3 persons who can be able to appoint the directors of the company, okay. Now, when it comes to therefore, okay, the fee, okay, when it comes to the remuneration, okay, when it comes to the payment to the auditors of the company. Now, the person who is going to be appointed, okay, these 3 persons, okay, the one who are going to be appointing the auditor and the one who are going to be therefore be given the power, okay, the one who are going to be given the power of also deciding, okay, deciding in court, okay, the pay that the auditor ought to be paid, okay. They are the one who have the power of therefore determining the remuneration, okay, that the auditors of the company shall be paid. So the appointed party is one that therefore do have the power of deciding, okay, the pay to to the auditors of the company, okay. So the appointed party is one who more or less determining therefore the amount that shall be paid to the directors to the auditors of the company, okay. Now, to us, therefore, what are the duties of the auditor? Okay, what are therefore the duties of the auditor? Okay, as per the Kenya Companies Act, okay, we said the first core duty of the auditor, okay, is about forming the opinion. Don't forget, you cannot say you have fulfilled your opinion. We cannot say, okay, you have fulfilled your responsibility, your duty, if we don't, at the end of the day, okay, deliver a report to the appointed party. Okay, you must be able to deliver a report to the appointed party, to the party that of course appointed you. Okay, so therefore, at the end of the one of your core duty, you must form an opinion. You must form opinion, okay, as to the financial statement of the company, the income statement of the company, and of course those 5 set of accounts. Okay, the income statement, the balance sheet of the company, the cash flows of the company, the notes, as well as the changes in equity. So you must give an opinion at the end of the day. Okay, you must give an opinion. That is going to be one of your core duty you have as the external auditor. Okay. Over and above that, of course, you need to go through the report of the directors. Okay, the director elimination report. Okay, remember when we were discussing on the report of, I think when we discussing on the auditor's report. Okay, report prepared by PwC. Okay, to the shareholders of Safaricom. Okay, one of the key mention we did was you also, as per the Kenyan Companies Act. Okay, you also need to give in quotes. Okay, you need to go through. Okay, the report of the remuneration of directors. Okay, that is a requirement of the Kenyan Companies Act. Okay, give me a second. Okay, sorry for that. Now, when it comes to the, okay, we were discussing on the duty, okay, that you have an auditor. I think one of the core duty I mentioned as an auditor you do have is on forming an opinion, okay, forming an opinion on the set of the financial statement of the company, okay. The other duty you have, the other core duty you have, of course, is on preparing a report, the report of preparing a report on the director's remuneration of the company, okay. That was on the duty. Okay. Now towards the rights you have as an auditor. Okay. Towards the rights you have as an auditor. Okay. And don't forget, at the end of the day, okay, for you to be able to carry out your work effectively, okay, of course you do in court require the protection, okay, of the law. Okay. And this again we in what referred to as the rights. Okay, you have a number of rights as an auditor. Okay, when it comes to the audit. Okay, and one of the conventional rights you have, of course, is access to information. You need to have access to information. Okay, if they are set of financial statement of the company, okay, then of course you need to have access to those set of financial statement of the company. You do require to have access to the financial statement of the company. Okay. And of course, you always require access to any servant of the company, okay, any servant of the company, where you do need, okay, if the other one, if for example the case of the internal auditor of the company, okay, don't forget to say that you can also use the work of the internal auditor, okay, when it comes to coming up with the opinion, okay. So you do have a right, okay, to access any servant of the company, okay, where you think it's all enough to gather the audit evidence, okay. All these are your rights, okay? Over and above the rights of the rights you have in the case of meetings, okay? The right to speak at the meeting, the right to be heard at those meetings, the right to attend the meeting, the right to have your presentation at those meetings, okay? So all these are rights that you have as an auditor. Over and above, of course, the right to be paid, okay? You have a right to be paid your money, okay? To the end of the day. You do need, okay, the right to be paid your money, okay? The right to remuneration, okay? Now, therefore, at the end of the day, okay, as an auditor, okay, as to get rights come with the duty, okay. I think you just mentioned those two, okay. The rights you have as an auditor, as well as what duty do you have as an auditor. However, when it comes to therefore, okay, who gets qualified as an auditor, okay? Who gets qualified as an auditor, okay? Who gets qualified as an auditor, okay? What are the qualifications therefore, okay? Okay. Now we see that generally, okay, there are 3 core things that you might achieve for you to be qualified as an auditor. The first is you must be a CPA 3, okay? You must be a CPA 3. That is a must, okay? You cannot become an auditor in case you only done section 1, section 2. You need to have done until section 6, okay? CPA part 3, okay? Not section 3. Part 3, okay, section 6, okay. That's one of the key thing that you must have, a CPA part 3, okay. You must have at least worked for at least 2 years, okay, in an audit, okay, in an audit environment, okay. You must have worked for at least 2 years, okay, okay. Then of course the other thing is that you must have been issued, okay, with a practicing license by ISPAC, okay. In short, you must be registered, okay, of course by ISPAC. You must be a member of ISPAC at the point when you are becoming you want to apply to become an auditor. You must be a member of ISPAC for sure, okay. Now, not all people can get qualified, okay. There are some instances where there will be what called the disqualification, okay. There will be what called disqualifications, okay. And one of the key things, okay, when it comes to the disqualification, who gets disqualified, okay, to act as an auditor, okay? One of them said is going to be a body corporate, okay? The first thing is going to be what we call a body corporate, okay? A company, okay, is disqualified from acting as an auditor. Audit is a personal service, okay? It cannot be provided by a company, okay? It is a personal service. It cannot be provided by a company, okay? The best you can do is what we call an LLC, okay? The best it can be is what we call an LLC. Limited liability, okay, partnership, or LLP actually, okay, limited liability partnership, okay. That's the best that the likes of PwC, okay, the like of UI can constitute themselves, okay. You cannot form as a company, okay, that's against the law, okay. A body corporate is disqualified from acting as an auditor in the case of Kenya, okay, in Kenya, or of course in most countries, okay. Well, of course, then by disqualify you in case you are a servant, okay, of the company, okay. In case you're a servant of the company, yeah, then of course you're disqualified, okay. You can't act as an auditor for the company you work in, okay. There's no objectivity there, okay. There's no element of independence there, okay. Also, in case you're going to be in partnership with a servant of the company, okay. In case you're in partnership with a servant of the company, then you're also disqualified, okay. In case you're in partnership with a servant of the company, and of course, lastly, in case you're disqualified from acting as an auditor of subsidiary, then by default you cannot act as an auditor of the parent company. Okay, and I guess this was a question that I asked in the MOOC. Okay, I think I remember that was a question that was in the MOOC. Okay, the element of the disqualification. Okay. Then of course we call what may lead to call casual vacancy. Okay, we'll call the element of casual vacancy. Okay. Now, in the case of casual vacancy, we said this is where we're going to have the office of the auditor, okay? The auditor ceases to hold the office, okay? It's going to arise the case the auditor ceases to hold the office, okay? In between the year, okay? That is, they have not yet prepared the auditor report, okay? What might lead therefore to call a casual vacancy situation, okay? Of course, the key thing is going to be in case the auditor is maybe, I don't know, for example, in case the ISPAC withhold the license of the person, okay, that can be a cause of casual vacancy, okay. In case they get disqualified, okay. In case, for example, the license of this person is or get in court counsel, okay, is get suspended, okay, in between the year. Of course, that means therefore that particular office is remained a casual vacancy, okay. Of course, the case of death of the auditor, okay, the case of incapacitation of the auditor, okay, if the auditor becomes maybe insane, they can't go to do the work, okay. Now, all this, therefore, might lead to call a casual vacancy, okay. Don't confuse disqualification and casual vacancy, okay. Don't confuse the two of them, okay. Disqualification and casual vacancy, okay. That's on the casual vacancy, okay, side of it, okay. What else? Don't have it to mention about. On the Companies Act. Appointment, duties, rights, qualification, disqualification, casual vacancy. Okay, I don't think there's anything else. If there is, let me know. Okay. Now that's on the legal side of it. Okay, that's on the legal side of it. And actually, this question I did ask. Okay, I think it was in the part of the MOOC. Okay, discuss the legal provisions you meant to follow. Discuss the provisions you are also meant to follow in relation to the professional ethics part of it. If you remember, that was a question that was there in the MOOC. Okay. Yes, it was. I think it was question 1. Okay. Okay, that's on the legal framework side of it. Okay. Now we also have the case of the professional, okay, framework or the professional ethics. Okay. Okay, the professional ethics that you're meant to follow as an auditor. Okay. Is that you must, before you accept being appointed, you have to assess yourself. Okay, can I be able to act? Can I be able to act objectively? Okay, can I be able to act objectively in case I am the auditor of this particular firm? Can I act objectively? Okay, in case I am the auditor of this particular firm, you have to assess your own. You as the auditor, you're the one to make that assessment. Okay, of course, over and above that, the board of directors. Okay, of course, through the audit committee. through the audit committee, okay, they need to make the assessment. But you are the one who is meant to make an assessment first as an auditor, okay? Can I be able to act objectively, okay? Can I be able to guarantee in code, okay, that I will be independent, that I will not be have any biasness, okay, when I'm performing the final report to the shareholder of the company, okay? You are the one who is meant to do that, okay? In case you are not the first-time auditor, okay, of course you're meant to communicate with the outgoing auditor, okay, you're meant to communicate with the outgoing auditor. Check as whether, okay, could there be some issues that may have led to the other auditor, okay, to leave office, okay, maybe in case they had disagreement with the management, okay, maybe there was scope limitation they were imposed on their work, okay. So what could have led, for example, okay, to the outgoing auditor to leave the office, okay? And do you think you as the incoming auditor, okay, you're going to resolve those issues? If not, don't forget, therefore, you may decline appointment, okay? Don't forget, but before you communicate with the outgoing auditor, okay, you do need to get permission, okay, permission in quote, okay, from the client, okay? With the company you're going to be the auditor, okay. Of course, they need to give you approvals, okay, of speaking with the outgoing auditor, okay. You do require that approval, okay, speaking with the outgoing auditor, okay. Now, once you have assessed that, okay, maybe there was no any malice, okay, for the exit of the outgoing auditor, then you can appoint. The next actually another practical thing. Okay, it's not about ethics; it's more about practical. Okay, is to assess: do I have the manpower? Okay, do I have the manpower? Do I have enough employees? Okay, to be able to carry out this audit effectively? Do you have the manpower? Okay, do you have the resources? Okay, the resource in terms of manpower and the resource in terms of time. Okay, can I during if the year is 3 months to the year end? Okay. Can I carry out the audit in this next 3 months? Can I carry out effective audit? Okay, if that's not possible, don't forget time limitation. Time restriction itself can be a scope limitation. Okay, and it's that in case you can foresee that there will be a scope limitation, to an extent you may end up disqualified. To an extent you're going to be giving an unqualified opinion. And of course as not therefore you decline, okay, being appointed as the auditor of this particular firm. Okay, you decline the appointment. Okay, you decline the appointment in advance. Okay. Anyway, in terms of the ethics, okay, in terms of the professional ethics, okay, we discussed some of them. Okay, the professional ethics for professional accountants. Okay. We see that there are three fundamental principles. There are three fundamental principles that you need to uphold. Okay, the three fundamental principles you're meant to uphold. Okay, now what are these principles? Just a quick checkup. Delphine.
Yeah.
Yes. What are these fundamental principles?
Integrity.
We have 5 of them. We have the first one being integrity.
Objectivity.
We have objectivity.
Professionalism and due care.
Professional competence and due care. Professional competence and due care.
Confidentiality.
We have the principle of confidentiality. And lastly,
something to do with professionalism.
you have professional behavior. You have got professional behavior. Okay, you've got professional behavior. Okay. Now, those are the 5 fundamental principles, okay, that you're meant to uphold as auditor, okay, as contained in the Code of Professional Ethics for accountants, okay. So those are 5 fundamental principles, okay. And I think they're all clear, okay, all of them. Integrity, don't forget you're meant to ensure that there's no going to be, you're going to be honest, okay, and straightforward, okay, in all your business, in all your dealings, okay, in all your business dealings, okay, you're going to be straightforward and honest, okay. Objectivity, you're not going to have any conflict of interest, you're not going to have any biasness, okay, coming into when it comes to forming the final opinion, okay. Professional competence is that you're going to first acquire the necessary knowledge, okay. So first thing is you need to acquire, okay, the necessary knowledge, okay. So be a CPA3, okay? You need to go through the continuous portfolio development, CPD, by ISPAC. Go for trading, okay? Don't just stop at CPA3, okay? Go more than that, okay? Do you care? Don't forget, Charmaine, to don't forget the work you're in between. The work you're in between, it's at the end of the day, okay? You have also taken into account that you want to protect the integrity. You want to protect the integrity of the accounting profession. Okay, don't go there to change it. Okay, don't go there to change it. Don't do the work as meant to be done. Okay, don't do in quote some should work. Okay, confidentiality, of course, in case you do become privy to some set of private information. Okay, do not disclose this information. Okay, okay. Do not disclose to person who ought not to have access to that set of information. Okay. Professional behavior, okay, do not carry out, okay, in short, do not engage in activities that might paint a bad, might mean the market perceives, okay, of the accountants as fraudsters, for example, okay. Don't engage in activities that are going to paint a bad picture, okay, of the accounting profession, okay. That's on the professional behavior, okay. The 5 fundamental principles we are meant to uphold, okay. And those 5 fundamental principles, okay, we say that sometimes you can have threats, okay, you can have threats to those principles, okay, threats to objectivity and the independence of the auditor, okay. It's evolved enough, we consider, therefore, what are some of those potential threats to my independence, okay, threats to my objectivity, okay. And we say that there are 5 of them, okay. We say there are 5 threats to the fundamental principle of objectivity and independence, okay. We have 5 of them, okay. Just take a quick one. Just quick recap here. So Quinta.
Yes. Yes.
There are 5 threats to independence of the auditor. First one.
Self-review.
You have called the self-review.
Self-interest.
Self-interest.
Familiarity.
We have the threat of familiarity.
Intimidation.
We have the threat of intimidation.
And advocacy.
And you have the threat of advocacy. Okay. Okay, those are the 5. Those are threats to the independence of the auditor. Okay, those are the threats to the independence of the auditor. Okay, self-review threat, that means therefore you're going to more or less going to give an opinion on your own work. Okay, you're going to be reviewing your own work, self-reviewing. Okay, of course you are not going to be independent. You're not going to be objective when you're going to be reviewing your own work. Okay, you are in this company. You are carrying out an external audit. You are also the internal auditor. So you're not going to be very objective when critiquing your own work, okay, as the internal auditor, because you are the external auditor, okay. So you're reviewing your own work. You're giving an opinion on your own past work, on your own past judgment, okay. Self-interest, okay. This is going to be a conflict, okay, which is more or less going to be because of a financial interest you have in the company, a financial interest you have in the company, okay. Maybe the company does give you too much fee, okay, to an extent that you fear losing them, okay. You don't want to give a bad opinion on this particular company, okay. Now, the rate of familiarity is that you become too familiar to an extent you become sympathetic, okay, with a client position, okay. You don't want to give a bad opinion because maybe the company will not be able to issue shares in the market. Why? Because you did qualify the accounts, okay. You have become too familiar, okay. You become sympathetic, okay, with a client to an extent that your judgment is going to be sort of, okay, blood, okay, to an extent that the judgment you're going to be making is not going to be very objective, okay, because you become familiar, become sympathetic, okay, with the client. Intimidation can be either actual or perceived, okay, that in case you do issue about opinion, in case it's bad in quote, in case you qualify our accounts, okay, then you're going to inform the public that we in some point in the past we have been involved with you as our auditor, okay, you have been colluding to steal from the KRA, okay, you did assist us in preparing fake accounts, okay. And that can be intimidation, either actual or perceived. Then you have advocacy. You advocate a client position to an extent that in the future it becomes hard to go against what you are advocating in the past. Okay. For example, in case you are a marketer, okay? The client asks you to become a marketer when the client was issuing their shares in the public, in the case of an IPO, okay? So it becomes quite hard, okay? The client has been sued by KRA, okay? The client asks you, can you become a witness, okay? In the case in this tribunal, in this tax tribunal, okay? So you advocate for client position to an extent that in the future, to go against what you are advocating becomes really hard, okay? I think it's enough. Then I think we can mark that as the end of our class. Emma, ask the question. Emma?
Can you clarify the difference between actual and perceived threat?
So the difference between actual and perceived threats, okay? Now, actual threats, the client tell you, if you do this, okay, this is what we're going to, these are the repercussions, okay? It's actually, the client is going to actually tell you that, hey, in the past, we were in collusion. We did defraud the company, you as an auditor. In case you're going to qualify our accounts, in case you're going to qualify our accounts, then you're going to write a letter to ISFA, for example, okay? Now let's get an actual threat, okay? The client actually tells you this is what is going to happen. If this happens, then this is going to happen. Now, perceived threat is you as an auditor, okay? The client has not issued this threat, okay? But you know, if I do this, then most likely the repercussion will be as follows, okay? If I qualify the accounts of this company, in the past we have been involved in some bad deeds, we have been involved in some issue of this client know, okay, I do have some issue on integrity. Then if I qualify the accounts, then what is going to happen, okay? In the past, this client has been involved in some other auditors, okay? Some of those auditors who announce their fraud, okay? Some of those auditors who are able to announce their fraud, okay? Maybe it's assumed, okay? Those auditors, they were, for example, were killed, okay? Just an example, okay? The case of, I don't want to give the case of NACMAT, okay? Now, in case, for example, okay, you come in as the internal auditor of NACMAT after the previous auditor has been killed for announcing some fraud. Now, of course, you know that in case I announce fraud in this company, then I might end up in the same way. The client is not in, maybe not be issuing the threat, but you know, you perceive it, okay? If I do this, then this is going to happen, okay? There's a perceived threat, okay? Not an actual threat, okay? The client, there is no actual, maybe verbal or whatever that has been taken on you. But you know, if this happens, then these are the potential repercussions, okay? Emma, is that clear? I don't know.
Yes, it's clear.
Okay. Quinta, you had a question? Quinta? I think you had a question, Quinta. Oh, it's answered.
No, it's not answered.
Okay, ask.
On the disqualifications of an auditor, the one in the mock was at a firm level, not an individual.
Oh, don't forget, by the way, I know some of you, I think I've just remarked in some of your scripts, and I don't know how you understood the question. A firm does not mean a company. The term firm here does not mean a company. I think that's where there was a confusion, because most of you, I don't know what happened, okay? The firm here does not mean a company. Your firm, PwC is a firm. It does not mean that it is a company. Don't forget, okay? I think I saw that this to be, I don't know what happened, okay? I think you did misinterpret that particular question. You are firm, okay? You are not, okay? Now, you as many auditors, you come together, you form a firm, okay? You don't form, it's not a company, it's not a corporation you are formed, okay? But it is your firm as PwC, in short. Okay, I don't know, I think I saw this in mock and most of you got confused. It is your firm, not your company, okay? And this particular, I think some of you are thinking that it is a firm, it is a company, you are auditing, that it is qualifying you. No, it is you, what might lead to you getting disqualified, okay? You as a partnership, you as PwC, you as EY, what might make you to be disqualified, okay? I don't know, most of you, I think, got this question quite wrong. I don't know what happened. I think it's just how you did interpret the question. A firm does not mean a company. Of course, a company is a firm, but it doesn't mean that a firm is always equal to a company. I don't know. It needs to be clear. I don't know. I hope I've answered the question, because I think either in examples of you got it wrong. I don't know what happened there. Quinta, I hope I'll be able to clarify. Be able to clarify well.
So you give points as though we are considering an individual auditor.
Don't forget, as I mentioned, don't forget, as an auditor, you can be individual, you can be a partnership, okay? Yeah, but as I mentioned, it can be an LLP. So it's simply either those person, okay? Either an individual, either an LLP, or either a partnership, whatever it is, okay? But don't forget, you are simply what disqualifies you, okay? Now, in case you're going beyond, don't forget, even if you are an LLP, you are PwC. At the end of the day, there need to be someone, an individual, okay? I think I mentioned the case of Safaricom. I think we saw the accounts of Safaricom. The person is going to sign off those accounts, okay? I think we saw this game in the case of who is the engaging partner, okay? Don't forget, you as the one who is going to be the engaging partner, you are the one in charge of that audit, okay? So at the end, it boils down to the individual, okay? It boils down to the individual, not as PwC, okay? It boils down to the individual. You are the one, you are the auditor, in short, okay? PwC is a firm. It's going to be many auditors coming together, but at the end, it boils down to the individual work of that particular auditor. So there's no sort of a difference, okay? Either you're a firm, or you are a partnership, or you are individual, okay? It's one and the same thing, actually.
Okay, and the other question. In our first cut, I observed that most of us failed the question of casual vacancy. Though we had these same points, death and sadness of mind. Is there a way we should write them? It was just another side.
Oh, you got it wrong in cut one. Wow, okay. Then
most people had these points, but you marked them wrong.
They were marked wrong. Wow, okay. I guess then that has been could have been my mistake from my side. If I did mark them wrong, then that has been my mistake from my side. But those are the points, okay? The death, incapacitation, those are the points, okay, that cause vacancy, okay? If you got it wrong, don't forget, give yourself marks, because that is the right thing. In case you got them wrong, and you did write that, you did write the death, incapacitation, there's a withdrawal of your practice license by ISPAC in between the year. Those are the points, actually. So in case you got them wrong, give yourself marks, because that's the right. Those are the right answers. Clear?
Yeah.
Okay. Then fair enough. I guess we can pick from here tomorrow. Okay. So we meet tomorrow. We pick from here. Don't forget, as I mentioned, come with questions. Okay, as much as questions. This is your revision, so come with as many questions as possible. Okay. Then fair enough. I guess we can meet tomorrow then. Okay. I'm still marking your mock, and I hope maybe latest end of this, or by the end of the weekend, I will have marked them and sent them back to you. Okay. Fair enough. We meet tomorrow then. Petronila, you have a question?
Yes.
Yes.
I was asking you to repeat the reverse expectation gap.
Okay. Now, in the case of reverse expectation gap, okay, we mentioned that generally, okay, once the public, okay, do go through the accounts of the company, they're going to perceive them as if good things. In short, that, for example, if I go accounts of a company prepared by okay, that have been audited, okay, by PwC, what do I assume? I'll assume that the accounts of the company do present a true and fair view, because that's something good, okay. I'll assume that they are free from misstatement, that's something good, okay. However, okay, there could be instance, okay, I think I gave an example where some auditors, okay, in the past have been used by the clients, okay, to reduce the potential taxable income, okay. Now, in case maybe, okay, we know that in case you are the auditor, in case you are the one who prepared the accounts of this company, okay, you are the one who did examine the accounts of this company, then the client was using you to evade tax, okay. Now, if KRA more or less go through those accounts or those the finance statements that are prepared for tax purposes, okay, once they see that you are the auditor, they don't perceive as if this is good, okay? They're not going to be confident, okay? They're not going to be, there's no assurance here, more or less, okay? There's not going to be confident, okay? If anything, they're going to suspect that there could be fraud in this particular set of accounts. Why? Because you are the auditor who was preparing the accounts of this time around, okay? If that's the case, okay, that the perception is negative, okay, not positive, is negative, then that is a reverse expectation gap. Because the perception is meant to be positive. Okay, conventionally, it is meant to be positive. Okay, that if the people do go through your accounts, they see accounts have been audited, of course they perceive them well. Okay, there's assurance of it. There's a positive assurance side of it, okay? But if it is got to that, once we see the accounts for this company have been audited by this particular company, then we are going to suspect as if there could be fraud in this particular set of accounts. No, it's a reverse, okay? Is not what the market is expecting, okay? If anything is negative, okay? We are going to perceive them as something bad, in quote, okay? So remember a reverse expectation gap. Clear, Petronina?
Yes.
Okay. Any other question? Okay, fair enough. Then I guess we can meet tomorrow. Okay, we pick from here. Okay, see you tomorrow.